Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right, we are back with another episode of the Real Estate Investing Club. Today we have Anthony Vicino. Sorry, Anthony, I should have asked how to say your last name before we hopped on here. But we have Anthony. Anthony is the founder of Invictus Capital. He is a best-selling author, real estate investor, and serial entrepreneur focused on multifamily. We always like to have our multifamily friends on this show. So, Anthony, super excited to dive into this. Thanks for hopping on the show.
Yeah, dude, thanks for having me. So on the last name pronunciation, you actually nailed it in both cases, because like the Italian way to say it is Vicino, but the American way is Vicino. So you kind of nailed both.
Perfect. I wanted to cover both bases there just in case. Cool. So Vicino, I like that. That sounds better. It always reminds me of focaccia bread. I always said focaccia, but people say focaccia is the right way to say it. All right.
Really,
well, Anthony,
it's just whatever you say, you got to say it with confidence.
There you go. You gotta double down, be confident in what you say. Right on. Well, getting back to the topic, we're talking about real estate, not Italy. So, I told you before we hopped on the show, we like to start with stories. We like to hear how people got to where they are today. You're in multifamily, so I'm sure you got a good one. So why don't you take us to your story? How'd you get started in real estate?
So real estate's interesting because it kept trying to intersect into my life at multiple points. Like the universe was throwing real estate at me and I kept ignoring it. So the first time was in college. I was living with my roommate and his dad, who were doing fix and flips on single family homes. And in exchange for like helping out around the house, I got to live for free.
There you go.
The thing was, like, I'm really bad with my hands. Like, I'm the guy who can swing the hammer, but I can't hit the nail. So I'm great at demolition, but terrible at everything else. I get no enjoyment out of it. And so we did like 3 of those. And I walked away from that experience thinking, if this is real estate, I want nothing to do with it. and I think a lot of people, like, that's what, when they think of real estate investing, they think of like HGTV, fix and flip single family homes. And I just was like, that's not for me. So I went off and I did my own thing for the better part of a decade. I was a professional rock climber, and then I started writing science fiction and fantasy novels, and had kind of like a weird background. And
that's actually really cool.
Yeah, it was fun. But there was a point when real estate kind of came back onto my radar. The universe tried again, gave me a second swing at a second bite at the apple, as they say. And it was a buddy who came to me. I had started to get bit by the entrepreneur bug. So I'd started building like this window washing business, and it was going pretty well. And he came to me and he was like, "Hey, what do you think about investing in real estate together?" And so I was still thinking back on like the single family fix and flip. I was like, no, I have no interest in that. That sucked. It was horrible. But I believed in him. So I gave him some money to go buy these things. And like, I invested with him as a passive partner before I really understood what that meant. And we bought that at a good time back in 2012, and they did really well. And but it still didn't click. It still wasn't the moment yet where I was like, real estate, that's where I want to focus. That wouldn't come until about 2017, when I was getting to this point in another business that I had built, a manufacturing company, where I could see like the light at the end of the tunnel. Be like, I'm not going to be needed here very much longer. I'm kind of like working myself out of the job, building the systems, and have a really awesome team. And so I was starting to look around and be like, okay, what am I going to do next? What's the next thing that I can do? And just one day, driving into downtown Minneapolis, like for whatever reason, it was like the veil was pulled back, and I looked at the buildings for the first time around me, and I was like, who actually owns these things? Like specifically the skyscrapers.
Donald Trump.
Yeah, I was like, who owns these? Like, I've been around these things for 30 plus years and never stopped to wonder, like, who owns these buildings? And I think most of us assume that like it's rich people or institutions, funds, and that, yeah, a lot of buildings are owned like that. But also a lot of buildings are just owned by like mom and pop people who just go out and save up and buy it, or they just pool their funds together and go and collaborate and syndicate the thing. And so diving into that world, I was bit by the bug. I was like, oh my goodness, like multifamily apartment buildings, like this is pretty cool. So I started, went and bought a triplex, which is just as small as I could start to learn, because I wanted to learn the process. Yeah. Started scaling from there, did a refinance 9 months later. That story is pretty cool, actually. Just got really lucky. It was like the right time, right place type thing, and just kept scaling. And that was about 4 or 5 years ago. Now we're about sitting around $70 million of assets under management. And we're a little bit weird because we only focus in the Twin Cities. It's our backyard. We love this market. And we're vertically integrated. So we have in-house property management. So that means every day we're fielding requests from our residents, repair and maintenance, leasing, all that stuff. So that's the convoluted story that got us here.
No, man, I love it. That's a great story, especially you got started sci-fi novels and rock climbing. So I have to ask, what is the name of your book that you wrote?
So I've actually written 12.
Wow.
One that I'm probably the most well known for is this trilogy called the Firstborn Saga. Book number 1 was Time Heist. Book number 2 was Mind Breached. Book number 3 was Soul State.
That's awesome, man. I used to love writing, but after, once I got into the working world, I just put it behind me. But that's really cool that you made it. Rock climbing too. I used to really like rock climbing. Never ever made it anywhere near professional, but that those shows that have been coming out about like the people who climb El Capitan and those things, it's just crazy.
Alex Ronald and Tommy Caldwell like rolled pretty deep with those boys. And honestly, like, it sounds way more glamorous to say I was a professional rock climber. In reality, it just means like you live in the dirt and you climb on rocks all day. So it's cool, but it's not like changing the world.
Reality is always different than
exactly
on TV. But yeah, I really like that in your story on the real estate side, you talked about how, if this is REI, I don't want to be part of it. Talking about how you were actually working in the deals. You were like swinging the hammers, doing the work. I can relate to that. The first couple of flips that I did, I went out there, laid tile. I distinctly remember walking through some of my projects with a contractor, like an electrician or something, looking at what I had done. And he was like, man, who is that? Who's the contractor you hired for that? You should not hire him again. Like, bro, that was me. But I like that because, a lot of investors, they'll get into real estate thinking, watching HGTV or whatever and doing the work themselves and realizing they don't want to do this, but that is not what real estate is. I mean, you can do a deal without having to swing a hammer. So I like that you brought that up. And also that it sounds like it didn't click for you until until a number of deals into it where you kind of saw the puzzle kind of come together. And I know I've had that experience myself where, you have to have experience and see results before it really does click. Mm-hmm. So I love that. So you mentioned vertical integration, and I kind of want to hone in on that because that is something that it's kind of a few steps down the road. Once you start down your investing story, you have to decide how are you going to scale. Mm-hmm. There's many different ways to do this, but vertical integration is one of the ways that I'm intrigued about just because I'm considering it myself. Why did you decide to integrate vertically? And for people listening, vertical integration just means you're building everything that you need within your company. So property management, instead of hiring a third party property management company, you build it in-house. You have all the tools in your own in-house, in your own company. So my question to you is, why did you decide to go that route?
We're masochists. That's why.
Fair enough.
It's interesting. Like there's so many different ways to make money in real estate. There's so many different avenues. And I coach new and aspiring multifamily investors. And one of the first conversations that I have with them is, hey, let's get clear. Do you want to invest in real estate or do you want to build a real estate investing business? Because those are different things. And I think a lot of times when they think like, I want to invest in real estate, they start to go and start not realizing what they're really trying to do is build a business around it. Mm-hmm. Those are fundamentally different skills and different, some people want to keep their W-2 and they want to invest in real estate, but they don't want to do any of the work. For us, we knew from the beginning that we wanted to build a real estate investing business. And for us, it meant understanding who is our end user. That is from two different sides of the equation. One is our residents, and then the other side is our investors who are helping fund these deals. Right. And so we wanted to say, okay, whoever's closest to the end consumer wins. If we can cut out the middleman and we can be the ones who are ultimately accountable and responsible for the end result that we're delivering to our residents, which in turn will take care of the building, which takes care of the investment, which takes care of the investor, well, then that's going to give us maximum control. And so that's what we did from the beginning, but it's not for everybody. Like you're trading one set of problems for another. When you're building a vertically integrated company, it really caps how quickly you can scale, because for every building you bring into the equation, you need to go and hire, you need to find, train and retain awesome talent. And that's a whole different quagmire. We just went from, buying buildings to now having to buy buildings and invest in people. And that's very, very difficult. And so if you're not up for that challenge, then going the third party route can be great. But for us, we're control freaks. And we ultimately, we like to get our hands dirty and get involved in build the systems and the processes. And for me, I had built a number of other businesses where it was really predicated on the systems and the processes. And so I felt confident that we could replicate that success from those other endeavors into property management. But if I had never done anything else, if I had never hired or tried to train or run a team of people, I probably would not have gone the vertical route, because it's a whole new set of headaches. And the hardest part of business is always people. So whether that's your customers, your vendors, your employees, it's always the people. And when you get into property management, you're saying, okay, we're going to bring on a lot of people.
Yeah, absolutely. And I couldn't agree more that the hardest part of building a business, of scaling, of anything is the people. And that's not to say that people are difficult. It's just difficult to build systems with people in them.
People are different. They all want different things. The way they motivate is different. And so it's not that they're bad. It's just, you have to understand, the way you see the world is through your eyes, and how everybody else sees the world is through their eyes. And to be an effective leader or have an effective business, you have to be able to put yourself into their shoes and build something that can bring a bunch of weirdos together to be effective.
It's a nice way to put it. I like it. So on that note, once someone has, let's say they have 5-10 properties in their portfolio, they're using third-party property management, they're thinking about going to the stage where they're not just buying properties and investing. They want to build a business. And that involves bringing people on, bringing ops on, bringing acquisitions guys on. So what are the first few hurdles that you see investors running into once they decide that they want to go, start building a true business?
Man, that's a really good question. I think it's hard if you try to keep both feet in both worlds simultaneously. And so there has to come this inflection point where you make the decision to cut ties, that's with third party property management, and you go fully into you running it. But the problem is there's only ever two times to hire somebody. There's either too soon or too late. And hiring too soon costs you money. Hiring too late costs you opportunity, right? And so generally we see hiring too soon in that dollar amount as being scarier than the opportunity cost, because you can't quantify the opportunity cost on a spreadsheet. So what people they tend to do is they wait too long. They do too much of themselves, and they're not willing to make the investment of capital to bring in the people. And if you want, here's the secret answer. If you want to build a property management company, go find somebody who's done it before. Go find a badass property manager, pay them whatever they want, bring them in and set them loose. But the thing is, if this is your first rodeo in building a team and building a business, you're not going to do that. I can almost guarantee you won't do it, because it's scary. It's really scary.
Yeah. And that's true for you're talking about property management, but that is true for any position. If you want a badass acquisitions team, go hire somebody who's been a rock star, who's maybe worked with Marcus and Millichap, something like that. Bring them on, give them great commissions, great compensation, and say, hey man, go rock it. This is what we do. If you have better processes, please bring them on and let's do this. So I love to hear that. For you guys are 100% focused on the Windy City. That is very unique for people who are scaling, because there's tons of opportunity out there in the United States right now. So why are you guys focused on one city? Why not reach out to even neighboring cities to Minneapolis?
It's a good question. There's no right or wrong. Honestly, for us, it comes down to a couple of things. One is we're vertically integrated and we're local experts. Those are the two things that give us a unique edge in this world. When it comes to investing, when it comes to going and buying buildings, you have to have some kind of unique edge, something that you can bring to the equation that nobody else can, or you can do it in a way that nobody else does to realize value. Because if you don't have that, then there's really nothing distinguishing you from anybody else. And there's no reason they couldn't go do the same exact thing. And so for us, we recognized, well, we could go to all the hottest markets. We could go down to Houston. We could go to Austin. We could go to Nashville. We could go compete in those hot markets because everybody knows like they have crazy rent growth and tons of jobs and all this stuff. But we live here. And this happens to be a fantastic market to invest in. We have more Fortune 500 companies per capita than in any other city in the country. We have an incredible affordability index. So people are making a really high income and their cost of living is really low. And so we have a lot of room for rent growth. So all these things we look at and we're like, well, our backyard is very strong. There's not a ton of interest from other investors looking here. So really, it's our backyard to kind of go and do what we want. And it gives us a unique edge in that we know all the players, we know all the brokers, all the sellers, we know every street because it's our home. And so when we're looking at a deal, we can realize better synergies or better relationships than anybody else can trying to come into our backyard. And so we look at it and we're like, well, there's plenty of deals to be done here. Sure, we could do way more deals if we opened up our expanse to the entire country. But for us, it's not about being the biggest, it's being the best at what we do. And the way that you become the best at what you do is just to keep doing the thing you do over and over and over and over, keep iterating and improving. And so that's what we do is just over and over and over, just keep buying buildings in the Twin Cities, Class B, sometimes Class C, multifamily that has value add potential. Go in there, make it better, hold on to it. We're buy and hold people. So we don't like to fix and flip and just rinse and repeat over and over. It's boring, but it's effective.
Boring is that's my bread and butter. I do self-storage and people say that is the most boring asset class. So
it's the epitome of boring, but you know what? It makes money. Boring makes money.
There you go. All right. Before we close out this portion of the interview, you said my favorite word, value add. So why don't you tell us, you guys focus on value add out there. What are just give us one thing that you look for in the properties that you purchase that really are kind of home runs for you when it comes to adding value to your assets?
So the number one thing, the most impactful lesson I ever learned in business, period, was a mentor said something so stupid, simple, that I was like, wait a minute, why have I never thought about that before? And it was $1 saved is worth more than $1 earned, because $1 earned is always on a margin.
It's like Benjamin Franklin or something, right?
It's so stupid, but when you think about it, you're like, okay, so for every dollar of additional revenue I bring in, let's say I operate at a 50% margin or expense ratio, that means only 50 cents makes it to my NOI. But if I can go and reduce expenses by $1, that's a pure dollar of gain to my NOI. So the focus should always be, you're going to get more bang for your buck focusing on expenses. And instead of going and finding assets where there's always going to be specific things that we can do asset by asset. Each building is going to be a little bit different. But what we like to focus on is what kind of expense reductions and improvements can we realize simply by being us, so that every building we go and buy gets the benefit of having us behind it. And so, for instance, that's where in-house property management wins the day, because if we were outsourcing third-party management, our fees, like we've done the calculation on this, it would take us about twice as much to operate the building. So we can come in there, we can operate it without ever having to make a profit on our property management, because we want to leave every dollar of value in the building so we can realize the multiplicative effect of the cap rate, right? And so we can realize that gain in value later instead of realizing the profit in the short term. So every building that we buy, regardless of what's going on in the building, from day one that we take over, we're going to cut that expense. So we're already going to be operating it more effectively. And so that's like one level where it's like any building that we want to go buy, we know we can improve value just through that one thing.
Killer, man. I love it. A penny saved is a penny earned. That's a good model to live by.
Mm-hmm.
All right. Well, I just checked the clock. We did go through our 15-minute mark, so it is time to move on to the quick question round. Are you ready?
Let's do it.
Let's do it. Starts out with education. I'm a big bookie, so give me 2 recommendations. It doesn't have to be books. If you like podcasts, if you like YouTube channels, whatever it is, give me 2 recommendations, one for general life wisdom and one for real estate specific.
So general life wisdom is Meditations by Marcus Aurelius.
Oh, man.
It's so good.
So good.
It's life-changing. Everybody should read it. Everybody should read it once a year, if not more. Just constantly repeat it to yourself, because the lessons in there will serve you well, guaranteed. In terms of real estate, there are so There's so many really, really good books on real estate. One, though, that's not really about real estate, but I think it's really important for real estate investors to think about is a book called Anti-Fragile by Nicholas Nassim Taleb, which is, I think, it's one of my favorite books just on investing, but also on understanding how to create what he calls anti-fragile systems and businesses.
Yep. I was reading that book. I didn't get through it, but I did like the premise. It's a really good one.
It's dense. It takes a bit, so pace yourself.
Yeah. But Meditations, I can definitely get behind that. That is one of my favorite books. Read that I don't know how many times, but couldn't agree more. Very, very solid advice in that book. That moves us to the next question, and this is for your younger self. So if you could go to the Anthony who had no experience in real estate, say he was just trying his first one or two businesses, maybe he was just on that first fix and flip down back with your college buddy. If you could go back to him, look him in the eye, give him one piece of advice moving forward. Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
It's hard. I don't know if younger me would have even listened. So
mine wouldn't.
I'm like, I got all this great advice, but I know me and I know who I was when I was young. I don't think I would have listened regardless, but to a younger person who's listening to this, who's maybe more open-minded than I was, the most important thing I've realized is that you always hear people talk about invest early because you want compounding interest to have as much time to work on in your favor as possible. But the thing that I didn't really understand about that concept when I was young was that it's not just invest early in capital, but it's invest early in social capital, in your relationships, because that also compounds. Yep. And that's actually the more valuable investment overall. Because over a 10, 15, 30-year horizon, if you're consistently investing in the relationships around you, and I'm not just talking like professional relationships, but like friends and family and like the people around you, recognizing that like that's really what entails a good life. And if you want to be successful in business, it's overwhelmingly, abundantly clear to me at this point that your ability to succeed and go far in this life is predicated on your ability to work with and through other people. And so invest the time and the energy into that when you're young. Go to college for the education but more importantly for the relationships, and then maintain them. Like, don't let them go to the wayside.
Yep, man, great advice. Love to hear that. Invest in your relationships from an early stage, your relationships and your business. The earlier you can get started, the better it is. So love that. Moves us to the next question. This one is, I always lose my spot. There it is. Okay. Habits form the foundation of our life. So if you could point to one thing you do day in and day out, you feel contributes the most to your overall health, well-being, happiness, and success, what would that be?
The easiest, biggest one is time blocking for sure. So time blocking, if you guys aren't familiar with it, just a process of sitting down the night before and looking at your calendar, looking at your to-do list and prioritizing what's going to get done the next day and then scheduling it. So if you look at my calendar, all the things that I want to get done for the day, they're scheduled. So if that's emails, that's from 10 to 11 a.m. If it's this podcast, that's from 1 till 2. If it's this meeting, if it's write that book, everything that I want to get done gets on the calendar, because if it's not scheduled, it won't get done. And I firmly believe that you either own your calendar or your calendar owns you. And so time blocking is your way of saying, this is what I'm going to do. And it is hands down, the most valuable thing that I do.
Yep. I love that. Time blocking is super. I I feel like only recently it had like a name, time blocking, but the day before, deciding exactly what you're going to be doing and putting it in your calendar, I feel like that is super, super useful, and a great habit to start up with. And that leads us to the second to last question. I think I know what you're going to answer here, but I'm going to ask it anyways. The US is a big place, plenty of opportunity to invest out there. So if you could pick one metro that you are most excited in investing in today, what would that be?
So you think I'm going to say the Twin Cities, but what I'm actually going to say is invest in the city that you want to stick around and invest in for the next 15 years.
Okay. All right. That's good.
So wherever that is, stay there. Be there for a while. Because that's the thing with real estate. It's not get rich quick. It's get rich slowly but surely. So find a market that you think is going to rock for the next 15, 20 years and go hard in that market. And you won't be disappointed.
Yep. And I like to add on to that any market can be a winner. You just have to find good deals in there. A lot of people throw shade at Cleveland because it has a negative population growth.
No way.
Or, companies like that. But
Cleveland is like a really good price per door entrance compared to the rent. Like you can do pretty well in Cleveland, Cincinnati as well.
Absolutely. And that leads us to the last question. This one's for the listeners. You've given us a lot of good advice. I'm sure people out there want to reach out and say hi. So what is the best way for them to do that?
Yeah, I'm on all the social medias. So you can find me, Anthony Vicino. We wrote a book last year that's been sitting in the top 10 on Amazon ever since, which has been really cool. But it's called Passive Investing Made Simple. If anybody wants to learn about that world of how to invest in syndications, and this is not me pitching our products or anything like that, but you can go pick up that book on Amazon, or my special offer to your listeners is if you leave a review for this podcast on iTunes or wherever you're listening to this, and then shoot me an email, Anthony@invictusmultifamily.com, and say, hey, I left a review and I'm cheap and I don't want to buy the book, then I'll be like, cool. And I'll send you out a free copy of the book. So that's all you got to do. You got to leave a review and then shoot me an email. That's it.
Well, I definitely appreciate that. And I'm sure anybody who takes that advice and goes and leaves the review and reads the book, I'm sure they're going to get a lot of good advice based on what you shared with us today. So thank you again. And I look forward to continuing talking with you in the future.
That's good.
All right. And for everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. Other than that, I hope you have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode and were able to pull some actionable advice that you can go home with and apply to your own investing business. Before you go, I have a gift for you. If you're a new investor looking to get started or an established investor looking to take your business to the next level, I've created an ebook just for you available on the website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find a deal that's actually a deal, how to finance that deal with little to no money down, and how to exit a deal for maximum value. And if you get the ebook today, I'm going to bury you in bonuses, 7 of them to be exact. First, you'll get the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating real wealth in real estate. Then you'll get the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools and systems and even the vendors we use to grow our business. After that, you will get the top 100 best performing keywords pack, which will give you the exact keywords we use to target leads online and generate leads without having to lift a finger. Next, you'll get the contracts bundle for wholesaling and renting real estate, which will give you access to all of the contracts we use in the field to execute all types of transactions. After that, you'll get the Investor's Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automagically from those calculations. Next up, we'll give you the Investor's Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate.
And finally, you will get the wholesaler's template for quick assignment cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. I know that is a ton of things to say. I'm glad you were able to stick with it. So you'll get both the ebook and all of those 7 free bonuses when you download the ebook today. All we charge is the admin cost to run the show. So if you are interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page and take advantage of that deal. With that housekeeping item covered, I hope you have an absolutely fantastic day, an even better week. Keep rocking real estate, and I look forward to seeing you on the next episode.
All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.